Johnson & Johnson stock price is at a critical turning point. We're going to dive into the impressive Q4 results, explore the factors that are impacting the stock price, and uncover opportunities and hurdles that lie on their path to growth. Let's get started. Thomas, you had noticed something in the chart that alerted you to the possibility of today's sell-off. So can you show us what you were talking about?
Yeah, Lacey, I'd love to. Right. So this is the chart of monthly price action. And you can see that Johnson & Johnson has been in a sustained and strong uptrend for over a decade. This is the company growing and performing and paying dividends, buying back shares. You can see our little pandemic blip right here is barely a blip on the radar. You've got a little bit of a bubble formed right here, and the market tops off. This is because the pandemic bubble is burst. The Kenvue spinoff gets priced into the market. And so what I saw was this trend line is broken. We rebounded back, but the price action did not break back above the trend line, which suggests that a turning point was at hand. The stock might have rocketed higher and it might have confirmed resistance, which is what actually happened today. So let me go and find this other chart. And here you can see the weekly bars. Price action broke through that trend line, bounced off of this solid support line here. But again, we're having a hard time getting above this trend line, and this trend line is not going to be resistance. So what I see happening now is that J&J is probably going to be range bound for the next year or two. It may drift upwards. It may come down and retest this support line, but I don't see us making new highs, significant new highs anytime soon. So as I was saying in that article, there's not a lot of catalyst for a rally, but there's plenty of information to help support the price action over the next couple of years while this market normalizes and prices in that Kenvue spinoff.
Okay, yeah, Thomas, I noticed that the analyst ratings on MarketBeat for J&J, I was looking at the same thing that you were on the chart, and I saw that even this morning after the earnings were released, it did break below that support line. I don't know if it's bounced back up now, but it had went lower. And I was wondering too, like, how is it going to get a sustained growth back up to its previous highs? But I did notice that some analysts are projecting price targets of like 185. I think one analyst was even in there with a price target of over $200. Yeah. And I was wondering, I don't know what they're seeing there that maybe isn't being reflected in the charts right now.
So I think a lot of those price targets, especially the 215 target, came out before this earnings release. All right. And so they're kind of trying to price in future gains. Okay. But that 215 price target is significantly the highest target by like $20 or $25, right?
Oh, yeah.
So the range of targets is right around that 165 to 185 range, and consensus is right at 165, which is right where the trend line is right now. The consensus has been coming down, so I think that that's going to cap gains, at least until the analysts stop lowering their targets. And right now, I think that high 215 target is the riskiest one because it is so high above the consensus. It's the most recently set. It stands the most risk of being lowered.
Okay, well, Johnson & Johnson did have a solid quarter in Q4 despite the impacts of the Kenvue spinoff and the deleveraging of pandemic sales. However, little has emerged to catalyze the bulls. So although there's ample news support that supports the stock price over the long term, so let's kind of dive in there a little bit more. How did J&A strategically manage to maintain this strong performance in Q4?
Well, it's all a little bit of manipulation. Me and Chris were just talking about that. So like the reported results are all down compared to last year, and that's because of the Kenvue spinoff. Profitability was impacted because of deleveraging of COVID. But when you strip out the spinoff, you strip out COVID, you've got core growth and margin expansion, which is awesome. That's one of those things that will support the business over time because that core business is solid, it's growing, margins are good. But those near-term headwinds are the Kenvue spinoff and COVID deleveraging. So until those two things come into balance, I think that the stock is really going to be range bound.
Yeah, I mean, Lacey, you and we've talked about different stocks in the past, and I like to use the analogy with earnings reports of saying they're like progress reports because they
Yep.
talk to you about what's happened in the past.
Mhm.
They don't necessarily do a great job of predicting what's going to happen in the future. But what Johnson and Johnson's doing here, and I agree with Thomas, it's a little bit of a game, but all companies do it, is they're trying to point investors beyond the now. They're saying don't be a prisoner of the moment and look at our core business beyond COVID, beyond the Kenvue spinoff, and you'll see that there's a lot of growth there. And when you look at the pipeline, there's reason to believe that there's going to be a lot more coming onto the market that should help boost revenue and earnings.
Yeah, so let's elaborate on that a little bit. What are the specific products and markets that are contributing to Johnson & Johnson's growth back in Q4? And what are the unique factors that are propelling these segments forward?
Well, right now it's that normalization of end markets. So on a segment basis, both segments grew, but pharma was the weakest. That was obviously offset by the COVID decline, but medtech grew almost 10%. That's because of a normalization of procedures. One of the strongest subsegments was wound closure, which speaks right to increased procedure volumes. So the more times you cut into somebody, the more times you got to sew them back up. And then contact lenses, people have to see. So it's these core basic businesses are really sustaining the business now and the growth now. And that is really exciting to see for the long term, because as Chris was saying, there are some potential catalysts for revenue and earnings growth coming down the pipeline. If they can maintain this stable foundation, when those catalysts come into play, there is upside potential for the stock price.
Okay, so margin news is also favorable here. Both GAAP and adjusted earnings are showing positive trends. Tell us more about that part of it.
Just like we said before, I mean, reported results are down. The core business is improving. Looking forward, we just want to see that core business continue to be stable and or improve to help sustain some market sentiment, some positive sentiment while the market is normalizing.
Yeah, the midpoint of Johnson & Johnson's guidance, they reaffirmed their guidance actually for the coming year. And the midpoint of the guidance is, I think, still over 10% for earnings growth, which is outstanding.
Right.
You
But
know,
it aligns with the analyst's expectation.
Yeah.
So again, supports the price, but doesn't catalyze the market to new highs.
right.
So in comparison to its peers here and the historical performance, how does Johnson & Johnson's value and yield position itself as an attractive opportunity for investors? And I'm also curious, what are the expectations of a dividend increase? You said that the dividend is safe for 2024, right, Thomas?
It looks that way to me. As far as the value goes, it's trading in alignment with the S&P 500, but it pays about 100 basis points more dividend. So that provides you a little bit of a value for income investors, but it provides more value relative to its sector and to itself. Now, Abbott, another major med tech company, trades closer to 25 times earnings, pays about half the dividend. Yep. Johnson & Johnson historically has traded at a much higher price multiple with a lower dividend, so it's also got value relative to itself. It looks like a pretty good opportunity to get into Johnson & Johnson. We're just going to want to look and pick the right entry points.
Yeah, I think I was looking before we came on. I think the forward PE for Johnson & Johnson's like 16 times earnings, which
right.
I mean, I don't think I can remember a time when they've been that.
I think historically it's trading at like 25 or 28 times earnings. So certainly a chance for a price multiple expansion.
Yeah, and with a dividend yield of 3% and earnings growth, I think this year, like they're saying, maybe around 10%. I mean, that's more in line with what investors want to see, especially when inflation is still around 3%, and even the most optimistic analysts are saying it's going to be a little bit of time to get that inflation rate back down to the Fed's preferred target of around 2%, if it in fact it even gets there this year. So when you start seeing earnings growth of 10% ish, and then the dividend yield on top of that, that starts making Johnson & Johnson a little bit more attractive for income investors. as opposed to the 4% they can get right now on the treasury.
So knowing all of this, what else do investors need to consider?
Well, there are some headwinds coming up. COVID is still a headwind. There's still going to be deleveraging from that respect, but also the Medicare negotiations that could have a significant impact on sales for pharma and devices. So we're going to want to keep a close eye on that as well.
Yeah, they've got some very interesting drugs in their pipeline, especially as it relates to cancer treatment. But like Thomas said, those are going to be subject to scrutiny over the pricing and things like that. And then the talc lawsuit isn't totally resolved yet, and that's going to be something that investors are going to have to pay attention to in the short term.
Yeah, there's a significant potential for talc settlements to cut deeply into cash flow and cash reserves. So
yeah.
All right. Well, thank you everyone for watching this one. Stay tuned for more updates on J&J right here on our channel. And of course, the MarketBeat website where Chris and Thomas share their insights. There's plenty of great articles from them for investors to continue their research. All right, guys, we'll talk soon.